Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, the market sank at the end of the trading day today. Oh, it started out good, but we sank into the close, and well, it went lower. That's for sure. I'm not very heavily invested right now, but I want to kind of show you what I've been doing. I did day trade GE a little bit today. I bought it yesterday, wrote it up, well, only about 2%, and then I sold it. But I did take a little profit there. But pretty much everything else rested in cash. So here's my current holdings, just so you can take a look at them. Not a whole lot, not a whole lot to talk about today. For the XLE, which is the Energy Select Spider, that was down today on a little bit heavier volume, about 6% in volume down today on this one. I also have in mode. It was up today, interestingly enough, and then Serpico Tankers, which was down today on lighter volume. I did short Domino's Pizza today. Actually, towards the end of the day yesterday. And it's up a little bit, but it is suffering. So, well, we'll see. We'll see what happens there on that. Wanted to go through 5 of the top IBD stocks right now, something that you might want to take a look at. One of them, number 1 on the list right now, is a company called Supermicro, SMCI. The interesting thing about this one is they are very, very active in building server blades for data centers, and it's kind of an interesting company. Been around a long time, Silicon Valley company, but they really are in the kind of the server business, and they create the blades essentially that go into the data center. So pretty good numbers there. Up a little bit on volume, down a little bit on price. Right below 100 there, about 97.97. Another one that I'm watching very closely is Allegro Microsystems, symbol ALGM. This one was up today, about $1.75 on lighter volume, but definitely some of these smaller chip stocks are doing quite well. As you know, the CHIP Act passed, and it's going to basically push some capital to some of the the companies that fabricate their own chips. Now, there's 2 different kinds of companies really in the semiconductor business. One, of course, is the fabless semiconductor companies. These are people that primarily design and then work out the logistics and the supply chain to manufacture, but don't actually do their manufacturing. Companies like NVIDIA fall into this category. Then there are other companies that actually design, manufacture, and everything. Companies like Texas Instruments and Intel fall into this category. Also, there's some other companies like On Semiconductor, which is in this category. So there's sort of 2 different tracks here for the semiconductor industry. The CHIP Act will primarily benefit the companies that are manufacturing primarily in the United States, and also the companies that make equipment to manufacture they make the chip equipment. They make the chip equipment to manufacture chips in the United States. So, but it does appear that we are starting to see some movement in some of the chip stocks. The interesting thing, it's typically the smaller companies, not the larger companies like the Intels and other ones that are getting most of the love. It's mostly the smaller ones: Allegro Microsystems, ALGM, of course, and then Axcelis Technologies, ACLS. That was up today nicely, about $2.59 in percent. So that was up nicely as well. And there's some other ones out there that are looking good. You might want to also take a look at PI. That is one that I have bought and sold. So interesting companies there. All right, let's take a quick look at the S&P 500. This is, of course, is the SPDR. This is the ETF, the exchange traded fund that covers the S&P 500, and it's weighted to its to take into account the price change. We were pulling down a little bit today. We're right below 400. I believe that we're sort of stuck in this trading range The low of the trading range is about 391 or so. The top end of the trading range about 431 to 440. So we're kind of in this range. We're sort of going sideways. Not a great market to trade. Not a lot of power in the market. I'm primarily in cash, and that's where I stay until I can find some opportunities going forward. Now, there are some stocks that we want to probably take a look at. I want to take a quick look at First Solar, Iridium, and then ACLS. So let's take a look at Iridium first. Iridium, interesting company based in McLean, Virginia, IRDM. This is a company that potentially will be a competitor, even though it's been around for a long, long time, to SpaceX when eventually SpaceX comes public. Right now, SpaceX, which is the Elon Musk company, is not public, but they are probably going to have, if the conditions improve, they'll probably do an offering. Iridium has been around a very long time. They have satellites, of course, in orbit that provide communication throughout the world. I mean, yeah, on the seas, anywhere in the world, these signals cannot be blocked. So interesting company. It has pulled back to the 21-day line, which is potentially a very good place to buy it. We do have a 96 relative strength. That is very, very good. That means it's in the top 4% currently of the stocks that are trading. So very, very good there. If we look at the weekly chart and we kind of move over to that, we can see that the numbers on this one is very good. The last earnings just came out. The revenues were up 24% quarter over year, which is excellent. They are still, unfortunately, believe it or not, in terms of their cash flow, they're fairly good, but it still could use some more power in terms of their cash flow. But they do have a cash flow, and their PE ratio is extremely high. It's 868, which in this sort of a market, which is sort of the show me market, it's a tough market in that it really punishes companies that don't have earnings. So right now, very speculative, but potentially a good place to buy it. It pulled back again, and let's take a look just really quickly at the daily chart, see if there's any entries on this. I don't think there are. I was checking this one today, and I don't think we have any good entry points on Iridium, unfortunately. I'm kind of looking to see. I like to buy very close to that 21-day exponential line because that typically gives us a very good entry point. Now, well, I'm eating my words here. The 21-day line currently is only it's only what currently the current price of Iridium is only 1.88% above the 21-day moving average. This is not a bad place to buy it. We want to buy within 5% of that 21-day line, typically an upward trend. That typically is the best. So it moved up, it pulled back, it had its earnings. There was some excitement there. It pulled back to the 21-day line. So we may get a bounce here. Not necessarily a primary buy point, a sort of a secondary buy point, but still really, really good. Iridium is the issue. Let's take a look with ACLS. This is, of course, a chip company that I've been watching very closely. ACLS. And there we go. This is Axcelis Technology, and they do ion implementation. This is a chip equipment company, very important in the new in the new chips that are being covered under this new Chip Act. We're going to see a lot of investment in some of these companies that do make chip equipment. Of course, ACLS is in there. One of the ones we also want to watch is Applied Materials as well. So the equipment manufacturers, the chip equipment manufacturers, also KLA is another one that we want to take a look at as well. So we want to be and of course the king of them all, ASML. That's the Dutch company that makes the steppers that make the absolute cutting edge chips right now. So those are the ones we kind of want to look at. ACLS doing good. I had a small position in this one. I wrote it up. I just basically took profits. I didn't really um, uh, didn't really run this one that much. 21-day line, it's seven right now. It's 7% above that 21-day line, so it's getting to be a little extended. Not quite yet, but there. It's a 100% checklist in an area that I think is going to do very well in the next few months, and that's going to be the chip equipment area. So that's definitely also one to put on your watch list, ACLS. And then also, let's take a look at First Solar. This is one I'm not currently in, but it typically is the leader F. SLR. This is the leader typically in the this is the leader typically in the solar space. First Solar, FCLS. That's right. No, FCLR. Okay, well that's not FSL. Excuse me, FSLR. I remember that. FSLR. There we go. Now hopefully First Solar. Super. We got this one. This is pulled back basically to the 50-day line. We're pretty deep into the cup here, but it was up today significantly after hours. It was up 6%. So I do think that it's going to start breaking out. 98 relative strength in the top 2% of all stocks currently. Now the checklist is not nearly as good. It's only 67%. But the question is, can we buy it at this price? I think we can, because the 21-day line here is 168.40, which is only currently the price is only 1.65% above the 21-day line. So this possibly, if we get a bounce off the 50-day line, which is looking like it's definitely going to happen, especially looking at the volume coming in on this one. This one might be good for a good little pop. And it does look like it's up in the after hours trading. So it was up today on heavier volume about 1.8%. Then after hours, it's up about 3.8%. We did have earnings, and that's the reason for this. That's the reason for this pop in the stock price. We did have earnings. The sales were up about 8%. But and we do have good cash flow, but I still a little bit leery. This is kind of something you might want to day trade. I may be looking at for a day trade, but currently I don't have it. But that's just kind of a good one to take a look at. All right, let's get into some of the questions. Thank you so much for holding here, Sandeep. Time to short Tesla. You may be right on that one. Tesla has a lot of what they call overhead supply. And let me just show you that chart here. And so we can kind of look at it together here. Because I agree with you. I think that, here's the thing about Tesla. Tesla kind of has a mind of its own. But if we go back here, this is the, if we go back to the overhead supply line, that's basically right here. You can see that indeed we do have, if we track the price, we do have an awful lot of we do have an awful lot of buying above that 209, 211 area. Now it's at 205, and it does look like it's getting all kinds of resistance at that 50-day line, and that makes sense because so many people bought it, they held on to it, it went lower. This is the daily chart here that we're looking at, and now that it's coming up to that 200-day line. That's kind of where it's going to get some resistance. Only 27 relative strength, so not looking all that good. But yeah, I think we might get into point to short. I'm not shorting it yet. I'm a little bit leery. Tesla is a tough one to short because it's very volatile. So, I mean, I think you could start putting that on your watch list for a short. So interesting. definitely interesting look with C there. All right. Charles, thank you very much again. I want to like AA. Oh, me too. I wish that I don't know. Look at AA real quick. Uh, Alcoa, basic materials. If I was more confident in the production of aircraft, then I would be more excited about Alcoa. But the thing about Alcoa is, without trade barriers, I mean, I think you know, without tariffs, I think that Alcoa is a tough one. I think really what we need to do for our basic materials industry in this country is put some tariffs on it because to protect this industry. It's so hard for these guys to make money, in my humble opinion. It's just, when you have to compete basically with slave labor in certain countries, it's very, very tough. They did just go through earnings. Their sales were down about 20%, and they did unfortunately their profitable their earnings per share did retreat. They're still profitable, but it's still just it's a kind of a tough one. The PE ratio on this one is 10, which isn't that surprising considering this is a basic materials industry. So 10 on this one, and the return on equity about 18%, which is very, very good. We have a lot of funds that are in this one. I would just be super careful. I'm kind of leery about the basic materials right now. I think we're going to get some good action on other things, but this one, I just, I know that people have done well with the steel producers, but I don't know. I want to see some more value add in it before I get interested. But anyways, 4 out of 9 on the checklist. So I think you've got to. I think you've got to. I think this one has to be. Yeah, we have to be careful with this one. I just don't think that this one is going to make it work. So short snowflake. You're really in a mood to short there, Sandy. Boy. But yeah, I kind of sort of agree with you on maybe on Snowflake. Snowflake is SNOW, of course, is the symbol on this one. Snowflake is very, very heavily invested by a lot of the funds, and they're looking for an exit. They're looking for the exit door on this one, because if we look at this is the weekly chart that we're looking at here. You've got a solid, it's just solidly down. If we look at the daily chart, it's even worse. It came up above the 200-day line, which normally would signal, hey, we might be able to buy it, but then it's just retreated below that. So it just doesn't look good. It just doesn't look good. There's earnings in one day. I would steer clear of this one. Wait for earnings tomorrow on Snowflake. Let's see if it's going to do anything. It might. I mean, it might. Let's kind of go over and take a look at the fundamentals on this one real quick to see. Well, the sales are good. The sales are definitely moving right up there. But the problem, of course, is just like so many of these other ones. I mean, the sales are up, but there's no earnings per share. The cash flow is negative. So this kind of market is punishing those kind of deals. It just really is. It's punishing companies without earnings. It's just that simple. So yeah, I think we got to steer clear of that one. All right, let's take some questions from TikTok. Thank you very much for taking a look, everybody. Okay, Kenny _ 22. VTNR. Let's look at VTNR real quick here. VTNR. Let me get my charts here going. VTNR. I may have solved a technical glitch, hopefully, that was impeding my camera and my mic for so long that hopefully that'll work. Vertex Energy. And let's put that up on the screen. Vertex. And see what we can find out with Vertex. I'm going to jump on over to the daily chart to take a quick look at it. We did have a spike up. We had a gap up. So earnings were good on this one. It moved above the 200-day moving average. That is a strong signal. Now, the group that this is in, oil and gas, refining and marketing, it's moving. It's still pretty good. Would I buy this thing? Well, I've been careful about buying gap ups this year just because the market's so screwy. I mean, if the market were stronger, I would be buying all the gap ups that I could get my hands on. But in this market, we get the gap ups, and then I immediately will throw a stop loss in there because it's just such a screwy market. 44% on the checklist, which is okay. It's nothing great. Typically, I don't like to buy anything below a 67% on that checklist. We also are pretty far extended above that 21-day line at 21% above it. So I just think we got to say, well, that was nice, but I think I don't think it's time to buy Vertex Energy. I think it's not giving us a good buying signal. Okay, sir. This is a company. This is Spring Her 2021. Is AMD ready to buy? Let's take a look at AMD. The chips, the problem with the big cap chips, and this is AMD definitely falls in that category, they just haven't been producing as strong as the results as some of the smaller chip companies. I want to compare AMD with a company called Rambus. I wouldn't buy it in this, we are getting a pullback, I mean, that's always been a good way to go, buying that pullback, but the pullback is below the 200-day line. It's right at the 200-day line. So I'm not excited about AMD here. I'm really not excited about AMD. I think we've got to be real careful. What I'd like to probably concentrate on is something that is going to be a little bit better in terms of in terms of what we're looking at. So I'm going to look here at AMD, and this is going to be from basically 7/1/2023. And then I'm going to compare it with a company called Rambus. This is a company I like a lot. RMBS is the symbol on this one, RMBS. It's an older company in Silicon Valley, but it's just had a much, much better performance in many ways than some of the newer companies. So let's jump on over to that screen, and just let's jump on over. Oops. see if I can get Rambus up here. I don't know why this. There we go. See if I can click it to the right one for Rambus. No. There we go. So here's Rambus, and it's basically AMD, and then we're sticking. Oh, geez, it's not going to let us. Well, I guess I can't share this one out. So shame on me. I guess I can't share this out. All right, let's look at TDD. This is the Trade Desk. This is a company that competes with Google and Meta, and it's sort of, if you want to place ads on websites, this is a syndicator, and so it's an interesting company based in Los Angeles. I was trading this one. It did split 10-for-1, but the earnings are down. I mean, in general, with the weakening economy, of course, ad revenue is going down everywhere. So, and that's definitely the case with the Trade Desk. We did have an increase in sales, but we had a decrease in earnings per share. That's really the key here. And but it does have good cash flow, $1.18 per share. And currently, the P/E ratio is about 52, which is kind of high, but definitely looking fairly good. They do expect, though, that they're going to have about a 7% increase in sales this year, and they're looking for a very, very big 2024. It's going to be up maybe about 29%. But I would be careful buying this one. I just think that right now there's just better merchandise out there right now to buy. So kind of the deal. All right, MIR is bull flagging. This is interesting. What a bull flag is, of course, is that that's when you have it potentially could be a nice short. MIR. That's kind of why I shorted wasn't really a total bull flag, but I'm sorry, yeah, bull flag. Well, I don't know about this. I don't know if this is a bull flag or not. Yeah, I don't know. Hard to say. More like wedging, I think, is what is. I would say this is more like a wedging situation here. Yeah, 93 relative strength. Hmm, radiation to Texas. I don't know a lot of this one, but I guess if we have a nuclear war, this one will do well. 7% above the 21-day line. I don't know about this. 20 out of it's not it's a general industrial, so kind of a good area. I don't know what to think about this one. So let me let me ruminate on that one. Hey bud, good to see you. Thank you, man. So appreciate it. Sometimes I've been having so much issues with my configuration. I think I finally got the configuration straight on this, so hopefully it'll be better than it's been. I mean, geez, Louise. ARKK. Of course, this is Kathy Wood's company, and it holds a lot of Tesla. That's the main. That's probably one of the main um, components in it is ARK Innovation ETF. I don't know. I don't. I'm not an owner of it. It just, I don't know. Look at that. It's just downward trend. I just, and it's right at the 50 line. I'm just not. I'm not feeling the love here. I don't think I want to necessarily short it, but I can't be in this one. I don't think it's any good at least for right now. So I think we got to be super careful. Let's kind of look. I want to look at things that have some potential. Now I did do a short trade. Well, not short. I did do a just a day trade on GE, which has been kind of moving nicely. I was out basically when it pulled back, but you can see there's my buy right there, and I wrote it up, and then I just pushed my stop loss up. It's going to pull back down probably to the 21-day line. I'll probably buy it there when it hits the 21-day line. Let's look at the 1-minute chart. You can kind of see, yeah, there it is, right at the end of the day. That's where I sold it right there. You can see that. That's where I sold it. Basically, I got in the morning, and let's go more toward let's go a little bit compressed time frame. There we go. Just really kind of bought it yesterday, and then set my stop loss there, and I kind of wrote it up, and boom. When it pulled back, that was it. I was out. So, it's good. This is not you're not gonna go broke taking profits, but you're certainly not gonna make a lot of money doing that either. So, not necessarily the greatest thing. All right, this is probably the last one, Mr. Jeet ASUR. Let's take a look at that one. Everybody. ASUR and excellent. Assure Software. I don't know this company again. Look at that. Wow. Look at that. Look at that gap up. There must have been something going on there. You see, this is a gap for everyone here. This is a gap up. It came in, earnings happened, and then boom, nice gap up there. It was up, about 2%. So that's looking pretty good. Don't know the company. It's in the computer software enterprise area. This has not been an area that has been terrifically strong in the last few months, but it is getting better. We have 8 out of 9 on the checklist, so that's looking good. And in terms of the pattern rec, let's see. Okay, well, we're up. The pivot's 921. We're at 13, so we're quite a ways above the pivot. We're fairly extended here. I probably would not be a buyer just because we're too extended. And in this market, that could be the kiss of death. So great. Well, thanks for everybody for dropping by. I'm going to be a new offer. Wait a minute. Shipping. Okay, let's take the shipping because I do have one shipping stock currently. I have Serpico Tankers, which has not been doing that great. So let's look at ASC. Thanks, Charles. It's a good question. Yeah. Ardmore Shipping. Yeah, this is a good one. Yeah, shipping has been incredibly strong. I mean, you're right about this. Ardmore Shipping, very nice. It looks like it's up after hours. It pulled back. It's right at the 10-day line, looking very, very good. I want to kind of compare it to other ones. Now, I own Sting. I own Sting, which is sort of in the hunt, but not quite as good as I think Ardmore is better. I think this is a better stock. Let's take a look at the pipeline. Now, I want to take a look at this, compare this to the other ones. Let's see if I can. No, it's not letting me do it. But Ardmore looking very, very good. It's a little. The only thing about this, my only concern about Ardmore Shipping here is I do believe it's yeah, it's a kind of extended. It's a little extended. So if you bought this, if you were smart and you bought this right, now it's pulling back. So I want to see how far above that 21-day line. Well, it's buyable actually, 6.6%. Typically, you want to buy that within 5%, but that's not bad. And it does look like it's a cup kind of, and this is sort of a little handle action there. So that may not be a bad place to be in it. Excellent earnings. So I definitely like the bulk chemical area. The bulk shipping has been very, very good. And, it's just weird, but the bulk shipping has been a very, very good area. So there you go. So, all right, everybody. Thanks again. I'm going to be coming up with an offer. And this is the Gavin McMaster options class. And he teaches this live, I think only about once or twice a year. I want to kind of, and I don't have the offer up on my site yet, but I'm going to put it out there for everyone. Really good. I've taken this. It's excellent. If you want to learn how to trade options from a master, this could be something that you might really look into. It's a really, really good course. I'm going to be putting it out there. Hopefully tomorrow I'm going to have all the kinks worked out for the offer, but I think it's really, really good. It's a really, really good course. If you're interested in trading options, this one could be very, very, very good. And it's only taught a few times a year. I think he teaches it twice a year, but the class is starting in March. That's going to be the class, and because we're friends, we're going to have it's going to be a 50% off deal if you book it through my site. So I'm going to have this hopefully up soon. Hopefully tomorrow I'll have all that kinks worked out. Try to give you more information about this, but this is the options course by Gavin McMaster. And of course he's a contributor at Investor Business Daily. So he's in Australia, but he's a fabulous, great teacher for options. If you want to learn options, this is the guy you want to that you want to take the class from. All right. Thank you very much, everybody. I'll be back tomorrow, of course. I'll be back tomorrow with Dallas trading floor, and happy trading, everybody. Tough market to trade right now. I'm primarily in cash. I'm just waiting. I'm just nibbling, day trading. Not really committing a lot of capital here, just because it's such a tough market to trade. We're in a market trend under pressure, so we really don't want to be committing a whole lot of capital here. We want to be real careful. But hopefully we'll get some more clear direction in the market, and we'll be talking about that tomorrow on Dallas Trading Floor. Again, thanks everybody, and happy trading. Oh, by the way, hit that like button. Smash that like button. It really helps me out, and I hope to see you back here tomorrow. Oh, wait a minute, one more comment. Hit the like button. Absolutely, please. I really appreciate it, everybody. And I'll be back tomorrow. Hope you happy trading. We're gonna start making some money hopefully once the market firms up. A little bit, but tough market to trade. You want to stay primarily in cash right now. I would say 50% in cash, and then wait for more clear direction in the market. I'll be back tomorrow at 5. Happy trading.